Hello, let's take a look at my bearish and bullish scenarios for silver, starting with the bullish scenarios on the 2-hour chart. Here we are counted this as a wave ABC in an expanded flat in a W, X, ABC in a zigzag, and then we move up, taking out this high and continue the trend. The other possibility is counted this as 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5, zigzag. And after this, we are looking for either continuing the trend, taking out this high, or like a W, X, and then a Y, and then we are continuing the trend, taking out this high. The other possibility is that this zigzag is not yet finished, because you can count this as a wave 3 and you can count it as a wave 3 and 5, which works either way. So therefore it is important to invalidate this wave 4 in order to know which one of these zigzags have the higher probability, or which is correct basically. So then we move on to this, a bigger WXY. So ABC in a W, ABC in a wave X, and depending if we hit this, then this kind of narrows down the options for a wave Y. So if we hit this, then we are likely to have an expanded flat, a regular flat, or a triangle like that in a wave Y, and then we move up, taking out this high and continue the trend. So the only bearish scenario that we have right now is this. So 1, 2, 1, 2. So 1, 2, 3, 4, 5 in a wave 1, 2, 1, 2, 3, 4, 5 in a wave 1, 2, and then 3, 4, 3, 4, 4, 5, and so on, looking for way lower prices. So which one of these have the highest probability? If we start with the expanded flat WXY, an expanded flat has a lower probability for a wave 4 in commodities like silver and gold. It is something along the lines of 13 to 14%. So therefore, this have the lower probability just looking at it statistically. So this A, B, C, W, X, and then Y. It's also a lower probability with a WXY than it is an expanded flat by itself. So therefore, it is even lower to have it like this, so WXY. But it works, and all of these are taking out the high sooner or later. So that is the directional bias, basically, what you need to be aware of. Then a zigzag have the highest probability for a wave 4, a sharp correction. This is kind of contrary to other cryptocurrencies or indexes, but here in commodities, wave 4s tend to be sharp and like a zigzag. So we either are finished with a zigzag, as in this case, and looking for either, as I mentioned, taking out the high, continuing the trend, or like a bigger structure as a W, X, Y, maybe a double zigzag even. So it is very important for this, the wave 4 invalidation at 79.895, to know which one of these zigzags has is the correct zigzag, basically, to look out for. And then the WXY, as I mentioned, a WXY have a lower probability than a zigzag for commodities in wave 4, but it is totally fine and it can happen. So it is important, if we touch this, then we know that it has a lower probability of being a deep corrective structure. Therefore, a triangle or a flat have a higher probability if we hit this line here. And the 1, 2, 1, 2. So here I have written a validation here. So, and also here, and I can explain what I mean. So here is a 1, 2, 1, 2, and this invalidation is mentioning it is connected to this 1, 2, and this invalidation is connected to this 1, 2. If you invalidate this in a 1, 2, this move down or an up, how you want to see it, can be an ABC as well. So if I do it like this, you can see, if I don't mess it up. So here you can see that we hit 138.2, which is a very common target for a wave B. So this could be a wave 1, and then you have A, B, and then a wave C here. So a wave C is commonly taking out this as well. So therefore, this bearish scenario is not invalidated just because we are taking out this. It is only invalidated when we take out this high. Sad but true. So, and also if we hit this, then it's a low probability for a wave 2, meaning that if we have wave 1 here and we hit this, then this scenario has a lower probability. And this is at 114.635. So better be safe than sorry. But in order to even remotely consider that the correction is over, you can take a channel like this. It's called a deceleration channel, used by Kennedy, an Elliott Wave trader. And you can see that we are still very much within this channel. So I am personally looking for a break with this channel. And also I want to see a 5-way structure, 1, 2, 3, 4, 5, with a retracement before I even consider that this trend is continuing upwards. So yeah, I hope this video was helpful to you, and I also hope that you had a great day.